Let's have a quick look at gold, quick discussion. This level that we've come into is a key level. Okay, this is on a 480 chart that we have discussed in a previous video. Okay, we had this on our charts previously. So we have essentially taken it the low of the week now. Okay, Monday, Tuesday, and Wednesday we had this move up. And you can see, look at the crawl, as I mentioned earlier in my previous video. Okay, and this down move, that's the real move, right? So again, high time frame, we have come into a very key support zone where we can see we do have a reaction from on a 4 hourly chart. Okay, from a daily chart, I have mentioned that this level here could be the next draw on liquidity. Okay, now on a 15-minute chart, prior to having this down move, I was looking, we were up around here, and I was looking for these down candles to hold price, looking for a potential scalp trade up to the high of the previous session PM session, right? Previous PM session highs here. Obviously, we didn't get that. We had this move down. And so that scalp trade that I was looking for has now been null and void, right? So we've come down quite quickly and quite sharply into this 4 hourly fair value gap. And what I do feel is an important level. We do have an order block here, and this wick down has come into this candle. Okay, if I just draw a line to show you where that wick has tapped into, that's this order block that has taken liquidity, right? This order block has taken liquidity. And then this order block that we've come into is connected to that, okay? So that does mean that is an important level, and obviously the fair value gap where you can see the bodies are still remaining within. We've still got about 37 minutes remaining for the 4 hourly candle to close, okay? But there's something on this chart that is often hidden and is very powerful as a support or resistance level, okay? And that is known as a volume imbalance. Now, on Twitter, let me bring up my Twitter profile. I posted a chart here of the New Zealand dollar. Let me find it. There it is there. So a volume imbalance is where you don't have any wicks, right? I've mentioned it here. Sorry, where you don't have any bodies in the body candles, you have only wicks, right? This is the weekly chart of the New Zealand dollar. And that is often a support zone, the market, or a draw on liquidity, okay? So if we go back to our gold chart, I want to show you a couple of things here. Now, sometimes TradingView doesn't really show it to you, okay? But there is so it's not visible here that easily on TradingView. The level we've come into on a daily chart has a volume imbalance. Let me show it to you on my platform, okay? Let me bring it up. Okay. So right there, this is a daily chart, and you can see we don't have body candles through that yellow price range that I have marked out there on my chart. I've taken a picture of this to highlight the volume imbalance, and that's where we have come into, okay? And so far have rejected from. Notice that is also a order block, right? So we are already expecting reaction from this level. This is a daily order block, the high time frame support zone, okay? And then coincide that the confluence here is this volume imbalance. And notice above, this is where we've come down in Asia, also has a volume imbalance, okay? So that would be support and that would be resistance. And so based on that, the fact that we've come to a daily order block and a 4 hour order block and fair value gap and volume imbalance, you know, this is a level that is a key point of interest. And you can see that we so far are holding that price. And I would expect at least a move up to these equal highs, scalp trade, okay? Now, the higher volume imbalance that would act as resistance, that move from that volume imbalance up to these equal highs is over 100 pips, okay? Now, the higher volume imbalance on that 4 hour chart where I'm expecting resistance is up here, okay, at 2400. So if we open up that chart again, that there is 2400. This is a daily chart, okay? So I'm now expecting us to retrace this entire candle, doesn't have to be all today, back up to that resistance level. But in that entire price range, that's all of today so far, back up to 2400, can I get 50, 60, 70 pips on that move up? Yes, I can. I don't have to wait for the market to move all the way back up to that resistance level. Okay, I've hit a support zone with confluence, daily order block, daily volume imbalance, 4 hourly fair value gap, 4 hourly daily, 4 hourly bullish order block. Therefore I'm interested in this and looking for longs. Okay, on a shorter time frame. Okay. And I don't need to wait for that 2400, which is up here, which is basically the high of Asia, okay, because that's a nice 260 pip plus move. But in that, I've now got a bias. And in that move, can I take off 50, 60, 70, 80 pips? Yes, I can, okay? So TradingView doesn't show you the volume imbalances, if I looked at the close of this is 2.3, it's up here. So the close of this is 2370.90. The open of this is 2370.90. There's no volume imbalance there. And I've noticed that on TradingView. But where you've got live prices like your brokerage account, the chart that you use on your brokerage account is actual real pricing, where I have shown you there is some volume imbalance from where this has reversed from around that 2370 level, okay, down here. Okay, and so I'm expecting now this market should hit up to 2400. Doesn't have to do that today, but all I'm saying is that establishes a directional bias. Okay, and from that directional bias, meaning that from this support zone, which has multiple confluence levels, daily order block, 4-hourly fair value gap, daily volume imbalance, all those things at the confluence, okay, to now indicate interim bullish bias, where I can be looking for bullish signatures to go long at the right time to get 50, 60, 70, 80, or 100 pips, okay, because 50 is enough, 50 pips is enough if you can manage your risk and position size well in accordance with your own risk tolerance level, okay. So quick video, that's all I really wanted to talk about, short discussion on gold and what I see right now. But the challenge for anyone that's only using TradingView is going to be identifying those volume imbalances. They are more visible on brokerage accounts where you have real prices, okay. I think TradingView, I'm not sure, I think these are CFD pricing, I'm not sure, okay. So see if you can use a platform that shows you the volume imbalances, okay, because they are very strong support and resistance levels where when you have other confluences, you can expect reactions from. Now, last thing I mentioned is in my previous video, I showed you how you can, let me turn off all these lines so that the chart's a bit cleaner, how you can use the initial dump, Monday's New York dump, to project a high. So if we took this dump, might even still have it on screen. There we go. We took this dump, there's the yellow box we drew that measured this entire dump, and from that we just put the exact same movement up from the highs. Okay, so we took this box here. Let me make this a different color. Let's make that darker. So that is a box of the dump. That is Monday's manipulation in the New York session, 7 a.m. to 10 a.m. that dump, and we've taken that measurement from the highs of that dump. We've measured it up, and we've got the exact high that was produced for the high of the week on Wednesday. Okay, now that is the entire manipulation. Okay, so if we now take that, let's do it on a daily chart. So this move up now, from there to there, is manipulation, because we've come down from there. Using that, where could we go? I do the exact same thing. I take that range, I project it down, and I get this level, which is now providing me confluent with liquidity that's residing, okay, above this gap, making this level 2350 or whatever's here, 2344, high probability, okay. But what I really want to see is some kind of a pullback before continuation shorts, and the fact that we've come into that volume imbalance inside a daily order block, okay, and a 4-hourly fair value gap, right, provides me now where I can enter long for that pullback, okay, before we continue down, if we continue down, okay. So I hope the video was useful. I will now talk with you in a future video.